how to trade pullbacks and reversals with the GMMA Oscillator and support and resistance zones. I'm going to show you how to use these tools together to catch high probability setups. Let's dive in. GMMA Oscillator. Created by Just Uncle L, this Pine script indicator transforms the Guppy multiple moving average system into an oscillator format, measuring the percentage difference between fast and slow GMMA sets. The oscillator concept was originally developed by Leon Wilson, adapting Darrell Guppy's moving average methodology into momentum analysis. The indicator calculates two groups of exponential moving averages, 6 fast EMAs, representing short-term trader activity, and 6 slow EMAs, tracking long-term investor behavior. The oscillator line shows the percentage difference between these groups, while a signal line uses exponential smoothing for crossover signals. Trading signals generate when the oscillator crosses above the signal line for bullish conditions, or below for bearish conditions. The percentage-based calculation normalizes the difference regardless of price level, making it applicable across various instruments and time frames. Background coloring provides visual confirmation of current market bias. The indicator supports anchor time frame functionality, allowing users to apply higher time frame calculations while viewing on lower charts. This multi-time frame capability helps align short-term signals with broader market direction. Smoothing options reduce noise in the oscillator line while maintaining signal integrity. Users can switch between standard Guppy and Super Guppy calculations. The Support and Resistance Zones by Harry 8FX identifies key price levels where market activity has historically shown significant reaction. It automatically detects and visually marks support and resistance zones using pivot point analysis of the price structure. The indicator creates rectangular boxes extending horizontally from identified fractal pivot points, clearly highlighting areas where price may potentially reverse or consolidate. The core functionality relies on TradingView's pivot high and low functions to detect bull and bear fractals, which represent significant turning points in price action. The indicator then draws customizable boxes that extend forward from these points, with resistance zones marked above price and support zones below. Each zone adapts to the specific candle structure at the pivot point for more precise level identification. Alright, let's start with pullback trading, since this is probably the most straightforward approach. The key thing to understand here is that we're trading with the trend, not against it. That means we need to identify the main trend first before we even think about entering a position. If price is making higher highs and higher lows, we're in an uptrend, and we're only looking for long positions. If price is making lower lows and lower highs, we're in a downtrend, and we're only taking short positions. Don't try to fight this. Now, for both indicators, we're using default settings. You're always free to experiment with your own parameters, but please, stop asking what the best settings are. They don't exist. Every market, every time frame, every specific setup will have its own optimal configuration. Default settings work just fine for this strategy, so let's stick with those. If the trend isn't clear, we wait. If price is consolidating in a range, we're not forcing anything. We wait for it to break out of that consolidation, and then we wait for the pullback. Let me walk you through a long setup. Once we've identified that we're in an uptrend and price pulls back, we're watching two things very carefully. First, the GMMA oscillator, that's the green line, needs to cross back above the signal line, which is the orange line. And here's the crucial part. Both of these lines need to stay above the zero level. You'll see that zero level marked as a white dotted line in the indicators section. At the same time, we need price to break above the blue resistance zone that's shown by our support and resistance zones indicator. Now, it's always better and safer to enter on a high volume candle that closes above that zone. Volume confirms conviction, and that's what we want to see. For risk management, you've got a few options. You can use a fixed risk-reward ratio, like targeting 2 times your risk, while placing stop loss just below the most recent swing. Or you can stay in the trade as long as that green GMMA line stays above the orange signal line, and exit once it crosses below. In the example on screen, you can see the price reached our target beautifully. Now, for short pullback setups, it's the exact same logic, just flipped. You're in a downtrend, waiting for a pullback up. The green line crosses below the orange while both stay below zero, and price breaks below the blue support zone with volume. stop above the recent swing high, or use your preferred risk management approach. Alright, now let's talk about reversal trading. You can also time reversals using these same two tools, and once you understand the logic, it's actually very similar to the pullback approach. Here's how it works. When price is failing to create a new low, like in this example on screen, we start paying close attention to what's happening. Price takes out the most recent swing high and then pulls back. Now, here's what we're looking for. During that pullback, the GMMA oscillator needs to stay above the zero line, and we need to see the green GMMA line cross back above the orange signal line. That's confirming that upward momentum is building. At the same time, we're watching for price to break above our blue resistance zone with volume. That volume confirmation is critical for reversal setups, because we need to see that buyers are actually stepping in with force. We enter on the candle close above that zone. Place your stop below the pullback low. For the target, you can aim for 2 times your risk as a clean and simple approach. As I mentioned earlier, this is just one of several ways to manage risk. There's no single right or wrong way to do this. In this example, price reached our target without any issues. Now let's flip this for a short reversal setup. When price is failing to create a new high, we watch it take out the most recent swing low and pull back. During that pullback, the GMMA oscillator stays below zero, and the green line crosses back below the orange signal line. That's our momentum confirmation. Price then breaks below the gray support zone with strong volume. Enter on that candle close, stop above the pullback high, and target 2 times your risk or whatever fits your style. And that's the complete strategy. 2 approaches, same indicators, clear rules for entry and exit. Practice these setups, backtest them, and make them your own. If you want a single trading system that takes all the guesswork out, check out our latest video on the Quantum Ribbon Pro indicator.